All right, so in today's video, I'm going to be talking about stock selection for the wheel strategy. So I've been asked about this quite a bit, and a number of you have even asked me, Davis, is this stock good for the wheel strategy? Is that stock good for the wheel strategy? So on and so forth. So what I've done is that I've actually compiled some of the stocks which you guys have mentioned to me to kind of analyze whether it's going to be suitable for the wheel strategy. So I'm just going to go through some of them in a bit and then give you my take on whether I think it's going to be suitable for the wheel strategy. So first of all, in general, when we are selecting the stocks for the wheel strategy, there are two ways that you can find these stocks. So the very first way is the most common way which you see many people actually talk about on YouTube, and that is to find those very high volatility stocks. So these are the ones where they give very high premiums, and you see a lot of people like to trade this kind of stocks mainly because the premiums are high, and also at the same time they tend to be lower price. So if you don't have that big of account, so generally people can still access these kinds of stocks. Now, one of the things with this kind of stocks is that usually when it's high volatility and the price is not that high, the company behind the stocks usually tend to be not that profitable. And if they are not profitable, what I found is that there is some sort of a correlation in terms of the company's profitability with the stock price movement, as I'll show you later on. So usually with companies that are not that profitable, it will also usually result in the kind of stock price movement as well. Usually the stock price movement is very volatile and it's not trending upward, at least for the most part. So that is the reason why I generally do not like to trade the wheel strategy with this type of stocks using the first criteria, which is finding just high volatility alone, but rather I like to go for the second type, which is what I call the fundamentally good stocks. So fundamentally good stocks. And the reason why I like the second way of finding the stocks for the wheel strategy is because the wheel strategy in general, it is a bullish strategy for the most part. Because if you were to sell the cash secured put, let's just say that we have a cash secured put down here and the stock comes down, and then now we are assigned, we're no longer having an option, we're now assigned 100 shares. The stock has to go back up in order for you to eventually become profitable with the wheel strategy again, regardless whether you sell the covered call at the same strike price which you sold the cash secured put or above. So this is where the stock selection comes in very important, because if you were to just find stocks based on high volatility, then you may have the premiums, but if the stock doesn't go up at the end of the day, then there's no point having those high premiums because you're going to be stuck in a loss. And this is something that quite a number of people have experienced. I know some of you have even reached out to me telling me that you have been stuck in some of the stocks which I actually have here in my watch list right now. And I'll be going through it in just a bit. So my way of finding stocks generally tend to be the fundamentally good stocks, because what I found is that the companies of the stocks, if they have been net profitable at least over the past few years, and also they have survived all the past crashes, like for example 2022, 2020, and even 2008, which is the great financial crisis, then the chances of the stock going up over the long term is going to be much higher compared to this one down here if you're just going solely for high volatility. So if you're the kind of person whereby you want to be more conservative, you want to play a little bit more safe, then you want to go for more of the fundamentally good stocks. So why do I say going for this one down here is much better than going for the high volatility stocks? And that's because usually the companies, if they are profitable, generally the stock price will be going up over the long term. And let me just show you what I mean over here. So for this, we can just very simply go to Google Finance. So all you got to do is go to Google Finance and type the stock which you're interested in doing the wheel strategy on. So in this case, I'm just going to type Amazon. So if you go to see the financials of Amazon, so if we were to scroll down, you can see the financials over here. This is where they show the income statement. You can take a look at the company's revenue and net income over the past few quarters and also over the past few years. So generally what I found is that when the company has been net profitable, at least over the past few years, the stock tend to go up over the long term. So let me just show you for Amazon. So Amazon, as you can see over here, net revenue and net income generally has been increasing over the past few years. And if you were to take a look at the stock price movement of Amazon, this is Amazon, you can see that it pretty much has been going up as well. In fact, it has been going up for over the past few decades. It has even gone past quite a number of crashes, like for example, 2008, which is the great financial crisis, and even 2020 pandemic. 2020 is somewhere down here, and then also 2022, where the stock market was in a bear market. Eventually it recovered and it went to the new highs again. So usually these are the kind of stocks that are safer when you trade the wheel strategy. So I like to go to the chart to take a look at how the stock price movement has been moving as well. So this is where you can go to the weekly and even the monthly as well. So with the monthly, you can have, a snapshot of how the stock price have been moving over the past few years. So next, let's take a look at some of the other stocks which I have here on my list. Maybe let's take a look at Google. Google is one of my favorite stocks for doing the wheel. So let me just go over to finance Google, and let's type in Google, and let us take a look at the income statement as well. So if you go to the income statement, you can see that same thing. Over the past few quarters, you can see that the revenue and the net income generally has been increasing. And let's take a look at the annual statement. Same thing as well. You can see that over the past few years, the revenue and the net income has been increasing. And that is why you can see Google, it has been increasing over the long term as well. Similarly with Amazon, it has gone through, the financial crisis, which is a very testing period for many companies. Many companies have gone bankrupt, but not only did Google not become bankrupt, but it went up. Again, the stock price continued to go up, and even went through the pandemic as well as 2022, eventually making new highs. Now, Microsoft is going to be the same thing as well, but Microsoft is a little bit very expensive, so I won't go through that. Not many people can do the wheel strategy on that. Now, what about Palantir? So Palantir is going to be an interesting one because you can see that Palantir has not been around for long. In fact, it has been the stock has been incepted only sometime in the late 2020, I believe, around here, and the stock has just shot up. So let's take a look at Palantir and see how the income statement has been. So Palantir is going to be one of those stocks that it may not necessarily have done well, at least at the start, because most companies tend to not be profitable, at least at the start, but later on they can become profitable and start to have the consistent gains over the next few years. But at the start, this is where it can be a little bit more speculative. So first of all, let's take a look at the quarterly results. You can see that over the past few quarters, it has been increasing the revenue as well as the net income for the most part. But if we take a look at the annual statement, you can see that it actually started off negative, right? This is how usually most companies start off with, but over the past 2 years, it has been profitable. So this is one of the stocks that I actually did the wheel strategy on, but it was a little bit more speculative for me because I believe in the company, whereby I think what they're doing is good, and I do think that they can be, net profitable over the long term. But however, at the point of time, they weren't as profitable yet. So that is why I didn't put too much into Palantir, although in hindsight, I wish I'd have put more. But at the end of the day, it's all about risk management as well, because if the company doesn't show that, hey, it has been, been net profitable, I don't want to risk that much, hoping that it will become net profitable, hoping the stock will be going up. So that's one thing that you do want to consider as well when you are choosing this stock. So if the companies have not been profitable so far, but you do believe in it, that you think it's going to go up, then I would say, put in an amount where you feel comfortable, whereby, if it doesn't work out and the stock eventually just goes all the way down, then at least it doesn't hurt you too bad. So Palantir is one of those stocks whereby, it didn't start out as a profitable company, but then the stock in the end eventually just did very well. So it actually kind of shows in the stock price as well, because the first few years you can see it's not that profitable, and the stock price pretty much has been not going anywhere over the first few years. It's only later on you can see that 2024 then it really started to shoot up, is because Palantir in 2023 started to turn into a profit. 2024 the profit started to become even more. So you can see that's how the stock price eventually shot up. So there is some sort of a correlation for the most part to, if the company has been profitable, then the stock price generally goes up, and if the company is not profitable, most of the time it's just going sideways or going down. So the next one, let us take a look at AMD. Okay, let's see AMD. Let's see the stock price. So you can see that for the most part, AMD has been going up. So straight away, this suggests to me that most likely the company has been profitable, at least over the past few years. So let us take a look at the financials and see whether it is true. So let's take a look at AMD. And let's go down to the financials. And yes, as you can see over the quarterlies, the past few quarters, it has been net profitable. And let's take a look at the annual statement. So the annual, overall, it's still net profitable, although it has not necessarily been increasing over the years, right? But it has still been net profitable. So again, as you can see in the stock price, generally the stock price has been going up over the long term. Now, let's take a look at some of the other stocks which you guys have asked me to take a look at. So starting from Chewy. So as you can see over here, Chewy, the stock price went to the peak of around $120 and it has pretty much crashed to the lowest point, which is I think almost close to $10. So it has a very big crash, and right now it's around $37. And some of you have asked me, should you do the wheel strategy on this? So let us take a look at the financials and see how it has been doing. So just from the stock price alone, it already has given me an idea that most likely Chewy has not been profitable. Otherwise, the stock price, it wouldn't have crashed until like what we have seen. So we take a look at the financials. So quarterly, at least for the past number of quarters, so far it has still been profitable, although it has been dropping. Let's take a look at the annual. So annually, it has actually been, I think, only net profitable from 2024 and 2025. So very slightly profitable, but in 2021, 2022, it has not been profitable. Yeah, you can see the net income is down. 2023, it has been profitable. So this is one of those stocks whereby, it has been profitable, but the profit is not that much and the stock price is not going up, right? So you can see there's a very big crash down here. So this is why looking at the income statement is just one thing. The other thing you want to take a look at is also how the stock price has been performing over the past number of years, especially going through those crashes like I mentioned. So if the company have gone through the test of time, through the crashes, and it has gone higher, it has made new highs after that, generally the stock, I would say, would be more resilient over the long term. But for this, you can see that, after 2021, 2022, the crash, it has kind of gone sideways. I would say this is really more speculative. Now, not to say that the stock won't eventually go up. It's just that, at this point of time, I feel that my money would be best put in some of the other stocks, which at least it has been proven that over the past few years, over the crashes, it has gone up to make new highs. So for me, Chewy, I would say it's a speculative one, not to say that it's not a good candidate, because just based on financials alone, we can see that it at least has been profitable. So I would say if you do want to do the wheel strategy on Chewy, don't put in too big of an amount. Now, next one, let's take a look at GME. Yeah, so GME, a very big one. A lot of people like to gamble on GME. They like to just buy calls. And let's take a look at what GME is doing. So you can see GME, the stock price. I would say this is something that I mentioned quite a few times. This looks more like an ECG graph, the electrocardiogram graph, which is the reading of your heartbeat. It's much more that than the actual stock price, because it's just pretty much going sideways. So let us take a look at the financials. Let me take a look at GME. GME, okay, so for the past few quarters, at least it has been profitable, but let's take a look at the annual statement. And the annual statement, well, only 2025, I think maybe 2024 as well. Let's take a look at this. Is this profitable? Very, very slightly. So 2024, 2025 is profitable, but 2021 to 2023 is not that profitable. So this is another stock that is very similar to Chewy, whereby the last 2 years, or at least currently this year, 2025, it has still been profitable. But we are not too sure how it's going to do over the next few years, because it has only recently turned a profit in 2024 and 25. And more importantly, the stock price is just too erratic, as you can see over here. It has gone through the crashes, yes, in 2008, but then it has just gone nowhere for many years until all of a sudden it shot up, mainly because this is a meme stock. Somebody has been talking about it in, I think, one of those Reddit threads, and then it just basically blew up from there. So in terms of the wheel strategy, it's just not that a good candidate for the wheel strategy. This is not something I would put my money on, and I wouldn't suggest you to do it as well. Next, SoFi. So SoFi has been in a lot of YouTube videos so far. A lot of people are talking about SoFi, do the wheel strategy on this. So is SoFi a good candidate for the wheel strategy? Well, let me take a look at the financial statements. So again, let's head on over to Finance Google and let's just type in SoFi and let's just see how it has done. So over the past few quarters, it has been profitable. So that's a very, very good thing. Let's take a look at the annual statement. So the annual statement, very similar to Chewy as well as GameStop, it has only recently turned a profit. And over the past number of years, at least from 2020 to 2023, it hasn't been profitable. So whether this is going to be a good candidate for wheel strategy, I would say it's going to be one of those speculative ones. It's going to be very similar to like Palantir, whereby at the start it's not profitable, but that does not mean to say that it will not be profitable moving forward. So as you can see, 2024, I would say this is at least a pretty good indication that at least 2024, maybe in 2025, it could be profitable as well. So whether you want to do the wheel strategy on this really comes down to how confident you are in SoFi. I myself will not be wheeling this stock at the moment because firstly, I do not tend to like stocks that do not have a very big history, and I don't know too much about SoFi as well. So this is something that personally I will stay away from, but not to say that you shouldn't trade it as well. So if this is a stock that you feel strongly for and you think that it's going to go up in the long term, then definitely you can put some of your capital into SoFi, but at the same time, do not put all of your capital just to bet big on this, because if it doesn't work out, let's just say, for example, it doesn't work out, it starts to go down, similar to what we have seen with Chewy, then at least it's not going to take a big hit in your portfolio. Now, next, let me just jump through some of this. Maybe let's take a look at Riot. So Riot, another one that some people have asked me to cover, to talk about. And as you can see, Riot, wow, look at this. The stock has just gone from, what is the peak of this stock price? 3,000 plus, and it has dropped all the way to $12. So needless to say, I think this stock is going to be very difficult for you to do the wheel strategy. If you had done the wheel sometime back then I think you're going to be stuck in the stock probably forever if you haven't gotten out of it. So let's take a look at the financial. And just from the stock price alone, it gives me the indication that it has not been doing well. So as you can see over here, yep, you can see the quarterly statement has been doing pretty poorly over the past few quarters, especially the last quarter. Very, very big loss down here. And if we take a look at the annual statement, although in 2024 it has been profitable, but you can see over here it's just very erratic. It's not consistent. So this really has shown in the stock price as well. So this is something that I definitely will stay away from. Now, the last three stocks I'm just very quickly going to cover. So NEO, this has been quite a big stock that number of people have been talking about. I think over the past number of years, people are talking about NEO because the volatility back then has been pretty high. But you can see that the stock has just gone down. It hasn't recovered. So this tells me that the financials most likely is not good as well. So let me take a look at NEO very quickly and let us see the financials. Yep. So as you can see over here, past few quarters, not making money, annual statement. Although the revenue has been increasing, but take a look at the net income. The net income has been decreasing as well. So although the revenue has been increasing, it has been losing more and more as it takes in more money. So this is why, like I mentioned, if you see the financials, it has not been doing well, then chances are the stock price is not going to do well as well. So you can see NEO has just been going down. So this again is not going to be a good candidate, at least in my opinion, for you to do the wheel strategy. Now the last two, AMC. So AMC as well, you can see that this stock, just by the stock price alone, shot up to close to, I think, around $400, dropped all the way down to $3. This is not a stock you want to do a wheel strategy on. So let me just very quickly take a look at the financials. Straight away, I know that most likely not profitable, yeah? So let's go down to the financials. So you can see income statement, past few quarters, not profitable. Annual statement, not profitable as well. Although it has been losing less, it has not been profitable so far. So I would again prefer to choose companies that have already been profitable, at least the past few years. This way, at least it's safer. I feel much safer, even though if the stock price is a little bit higher, I'm comfortable putting the capital in, knowing that at least it has a better chance for it to appreciate over the long term rather than end up like Chewy or like EMC, where it's just crashed all the way down to, just dollars, and you're not able to get out of the stock, because if you get out, it's going to be a very painful loss. Finally, Ride. So Ride is one that a number of you has actually told me that you have put your money into it to do the wheel strategy, because back then the volatility was very high. So if I was to go to the weekly chart, you can see that this stock has gone up to a peak of around $20+ and then just crashed all the way down to 30 something cents, right? In fact, I think one of the YouTubers was talking about this, where they had a position in Bright, right? It's one of his software, I believe, that have come up to say that Bright was one of the candidates for you to do the wheel strategy on. A number of you has done that, and it just gone down. So I think if in the beginning you have actually gone to finance Google and actually Googled the stock and just to look at a little bit about the financials, then you would probably have stayed away from the stock in the first place. Because if you take a look at the financial statements, it just has not been profitable, right? Since 2021, there's no profit. So even though if it's a very high volatility stock, what's the point, right? There has been no track record of it being profitable. Similarly, the stock price, although it has shot up in the start, I would say this is just the sentiment early on, but the financial just clearly shows that it has not been doing well. That is why, the stock eventually crashed. Now it's 30 cents plus. So here's my overall take. If you want to trade the wheel strategy, I would say it's much better for you to go for the safer route. That is to go for the companies that are much more financially sound. And a very quick way for you to do that is to just go to Finance Google, type in the company, at least take a look at the income statement for the past few years. So like I mentioned again, what I found is that if the company have at least been profitable over the past few years, it kind of relates to the stock price movement as well, whereby you will see that it starts going up over the long term as well. So these are some of the examples like Amazon, Google, even Nvidia as well. So hopefully this video has given you a better idea as to how to look for the stocks for the wheel strategy, so that at least in the long term, it's going to be much safer. Since you're going to put your hard-earned money into the market, then you're better off to look for at least both criteria, high volatility as well as fundamentally good stock, rather than just only solely looking for the high volatility stocks, and those stocks have no good financials where it's not being profitable. All right, guys, so hopefully this video has been helpful for you, and if it has, I would greatly appreciate if you give me a thumbs up on this video, and also subscribe for more options trading videos like this, and I will see you in the next one.